Okay, so let's do a quick review concept checks over chapter 3. Okay, so what would the effect on total assets be if a company purchased land for $200,000 in cash? So, we really just got to ask what's happening here, especially with the accounting equation, right? So we've got one asset that's going up here, land. We're getting a new resource, that land, but we're also decreasing an asset, cash. So really there's a zero effect. There's a net zero impact on the accounting equation, right? And that would be answer C there, right? Because one asset goes up by 200,000, one asset goes down by 200,000, they net to zero, there is no impact. Number 2, what effect does the payment of dividends have on the accounting equation? Well, let's pay dividends. Dividends is part of retained earnings. They're not an expense, but an increase in a dividend is a decrease to your retained earnings, right? So you've paid dividends. I'm assuming it's with cash because it says payment here. So we've had a decrease in cash, which is an asset decrease, okay? And our equity decreases because an increase in dividends is a decrease in retained earnings, which is a decrease in equity. What does the word debit mean? This one, very easy. Debit means left. Okay, so debit means left, credit means right. Pretty simple. You guys should be remembering that. Number 4, which of the following is used to provide a chronological record of all transactions affecting a firm? That's going to be your journal, right? So the general ledger is the more ordered version of that. It's going to show you all your account balances. They're the T accounts essentially, right? Your trial balance simply just shows you that your debits and credits are equal. There's no real error check there or anything. And then your income statement shows you your revenues and expenses. So your journal is what shows you your chronological record of transactions. Number 5, which of the following accounts would be debited or increased when a company pays $12,000 in advance for 1 year of rent? So we've got cash, right? So we're paying cash for something, but that's a decrease to an asset. And when we decrease an asset, we credit it on the right to decrease it. So we've got another asset here that we need to increase, and we're going to increase that with a debit. Is rent expense an asset? No. Okay. Is prepaid rent an asset? Yeah, and it's the one we're looking for right here, right? In advance for 1 year of rent. Okay, so we have prepaid some rent. It is now a resource that we'll get to use each month. So we would debit that to increase it, to signify that there was an increase in that resource. And number 6, which of the following accounts would appear in the credit column of a trial balance? So, got prepaid rent. No, that's an asset, right? That's going to be a debit. Dividends. Well, dividends are dividends, and they increase with a debit. Okay. Common stock. Common stock increases with a credit. And then salaries expense. Well, it's an expense, and that increases with a debit, so it's going to be C, common stock. Okay. So if you have any questions about the content of Chapter 3, please do not hesitate to contact me. I really, really, really need you guys to be communicating with me if you're having issues with Chapter 3 and Chapter 4 especially, because this is where the content gets a little more difficult. And I really need you guys asking me questions if you've got them. All right? Thanks.